I was struck by something you said, and I'm hearing this a lot. It's that it's a different place than we were in January following that December sell-off.
I think I was last here in the winter, and we were coming out of that big sell-off.
And we were
Valuations
cheaper.
looked cheap, so it was very easy then to say, you got to buy.
But a lot of people are saying what I think you're getting to the point where you're saying, geez, I don't feel quite as positive right now. And a lot of people are expressing that. End-of-cycle fears.
I don't know that we're at end of cycle, right? We're late innings, and I personally think that's the case. The challenge is now, how much further does this go? I can see a runway for another 5, 6, 7%. So I don't think you want to sell everything, but if you've had some nice moves, we're certainly paring back risks.
So you'd sell some stuff and then wait for a shallow pullback, like try to time it and then go back in?
It is extremely hard to time these pullbacks. So generally speaking, you want to stay invested through a cycle. But if you do take a tactical approach to markets, sure, take a little chips off the table, maybe move a little bit into fixed income, add some duration, and then look to come back in.
I'll do 5 or 6%, in my sleep, standing on my head. That's fine.
By the way,
I don't like 20%.
That's a normal equity return, right?
Well, then why not stay? Why not stay in? Why not?
Again, most of our clients are going to stay invested through a cycle, and that's the right way to invest because it's nearly impossible to time things. That said, if you have some great gains, vol is low. I had people who have taken some equity exposure off, replaced it by buying call options.
But a true end of cycle would mean more than a 5 or 6% pullback, wouldn't it?
Typical drawdown over 20% in a.
Well, that I don't want to be part of. Do you see that coming or not?
I don't think it's near. No, I mean, at the end of the day, look at earnings. I think most people will agree, better than feared. And so if we don't see a significant slowdown, trade fears have abated a bit, the corporate earnings still look okay, and that gives you a pretty good runway for probably a couple quarters.
That's the first thing that you said, was that earnings have come in pretty good.
Yeah, genuinely better than expected. So earnings always beat estimates. I calculated this is the 100th earnings season I've sat through in my career, and we've only missed estimates a handful of times during all those 100 quarters. So the fact that they're coming in above the Wall Street forecast is no big deal, but actually they come in more like 5 or 6% ahead of estimates. It looks like we'll get a positive kind of 2-ish% growth in earnings this quarter, despite the tough comps from last year. So as far as the news flow, earnings have been genuinely positive for the market, and they're generally quite good to support stock prices at these levels and maybe even a bit higher.
But, okay, so you've been sort of tepid about things.
Yeah.
And I think one of your concerns was what you just said you were expecting maybe them not to be this positive.
I think
so does that allay your concerns and make you less tepid?
Yeah, when we started.
It does? You feel better?
Yeah, I do feel better.
Really?
We started the year, I thought that earnings could actually be negative for the year. But now it looks like they'll eke out a couple % gain. And valuations are quite a bit higher now than were at the beginning of the year, because this whole rally has been driven by increases in price-earnings ratios, accompanied by lower interest rates. So I think that process has probably run its course, and that from here, if we're going to get gains as we go to the end of the year, it's going to be based on 2020 earnings looking like they're going to give us another 5, 6, 7% if that happens.
So you would call yourself, you've moved up a couple of points on the 0 to 10 scale on how bullish you were. You've gone from
that's true.
So 4 to a 5?
We've been net buyers over the past month or so, and we've moved up to a slightly overweight position in the U.S. Still nervous about Europe's growing very slowly, if at all. Asia's slowing down, so the rest of the world is pretty slow. But I think you can still participate in the U.S. market with some confidence.
So the government's not going to shut down for at least 2 years. Is that good or bad? I guess it's good.
I suppose it's good.
Fairly good. What else scares you? Europe's still not great.
Yeah, well, the rest of the world really is not growing all that robustly. I mean, Europe is probably around 1%, maybe less than that. China's been slowing down. So, and you still have these conflicts we talk about every single day about what happens with the trade war, what happens with Brexit. So there's things that can go wrong. I just think at this point we're probably getting a reasonable expected return out of stocks. Not a lot, but I think a few percentage points between now and the end of the year, I'd be happy with that. No
one's talking about Iran. I don't know. That grab these 17 guys. That can affect oil. That can. I mean, there's a lot of ways that can go wrong. And it's. I don't know. Is that on your radar screen, or is it Brexit?
Certainly, because that could weigh on sentiment. And to the points we were just making about valuations, you have a hit to sentiment that causes valuations to contract, and then that could be a challenge. But again, we've had a lot of these headline risks for the past 2 years, and yet here we are.
We're going to both fiscal and monetary policy are turning more supportive. So we probably will extend the cycle for at least another several quarters, and maybe beyond that.
We're going to get a GDP number, I think, on Friday. What is that going to be? That won't surprise people. It'll be 3. It's gonna be
Yeah,
2.
I think anything in that range is
2 to
fine.
3.
People look forward.
Around 2-ish would be my guess.
Okay. All right. Thank you.